thank you. Kathy, thank you. Casey, good to see all of you. Okay, the slides are under slides plus one, and for those who come onto YouTube, I posted up the slides on the link already. Okay. Hello, Angela, good to see you. The weather, Louis, good to see you. The weather here in Europe is terribly hot. Terribly hot. Esther, thank you for liking the share. Okay, it's terribly hot. It's like right now it's probably about 38 degrees. Yes, QI, good to see you too. Yeah, 38 degrees outside. They can die. Okay. Yes. Okay. Good to see Kimi. Good to see you too. Okay, Luis, good to see you. Okay. Just now, me and Dee were doing I was helping Dee do a live stream in a room. There is no air condition. I think both of us almost died. Yeah. Good. Okay. Good to see everybody. Okay. Oh, it's 26 degrees there. Wow. All right. Cool. Now tonight's topic is a topic that I want to steer away from the US market. I want to talk about a topic that's very important for many Singaporeans because I think bulk of Singaporean stocks are in the Singapore stock market. And if there's anything, I have been on a crusade to tell everybody to diversify out of the Singapore stock market, and consider a globally diversified index like the S&P 500, the Nasdaq, or MSCI World Index or something like that. Move away from the Singapore stock market, okay? And the Singapore stock market seriously is bad. Okay, it's bad. I initially wanted to use more diplomatic words, but there's no other words than bad. Yeah, just really bad, okay? So before we start, can we all, I know it's a bit late, I'll try to do a talk within half an hour. Give a huge blast of like, especially those on Facebook, and those on YouTube also, you may click like and follow. Okay, thank you, okay, it means a lot to me. Thank you, okay, yep, okay, yep. Alright, good, okay. Gotta apologize because, yes, why is Singapore? So, yesterday I want to give a talk, but there was no bandwidth, there was no internet, it's just no internet. Today, I took some time to move away from these work, and the weather is just super duper hot, okay, so you gotta bear with me. Let me do a quick talk on why I think the Singapore stock market is still so bad. Okay, so this is my 192 talk. Okay, the title of my talk is why is Singapore stock market so bad. Okay, now it's important for me. When I give the talk to give the disclaimer because I'm going to talk bad about the Singapore stock market, but it does not constitute to whether you should buy or sell stocks, okay? That's purely your consideration. I'm giving you what I think, okay? I'm not advising you whether buy or sell. I'm telling you what I do, okay? Thank you. When I started, nowadays it's quite easy to sell this topic, but when I started this crusade to tell everybody that the Singapore stock market is really bad, that's probably 5 years ago. You cannot believe, it's just like telling people that CPF is good. You cannot believe how many people throw stones at me. There's a lot of people throw stones at me, saying that Mr. Loo, you're stupid, Mr. Loo, you do not pick stock, Mr. Loo this, Mr. Loo that, and so on. 5 years now, I think the voice is getting softer. Okay, voice is getting a lot softer, super soft right now, right? And it's very important because people start to realize how shit the Singapore stock market is. So let's take a look at how bad it is. Okay, this is the Singapore stock market based on the STI index. The STI index, okay, and I've tried to track it all the way from 1988 when I was still a schoolboy. and it was there was still a ride. Okay, somewhere this turning point make a difference. This correspond to the Lehman Brothers collapse, and the stock market, entire stock market across the world all collapsed. So that was 2007 where it peaked at 3,800 points. After that, what happened to the Singapore stock market? It collapsed. It collapsed by some big time. Okay, that was there in the first time in my life I went in big on the STI index. Okay, I also went into the S&P 500 and a few other index of the world, but I went in the biggest. If I recall, was something like close to $500,000 into the STI index. That's quite a lot, right? Okay. And you know what? From that point where it hit the peak, okay, until now, which is 14 years, 14 years, okay, it still have not recovered. Today, this morning was about 3,182 points. It peaked at 3,800, then went up to today. It has never even get close to 3,800 points. Never. Okay? Some people say, SQ, good to see you. Some people say, hey, but STI index doesn't represent the Singapore stock market. Absolute rubbish. Okay? The STI index is the best representation of the Singapore stock market. Okay, and I'll explain to you. Okay? This represents 15 years of drought. 15 years of drought. This is worse than the US lost decade. Okay? This is worse than the US stock market. The US stock market, okay, has this thing called the lost decade. There was a period of 10 years, which is the inflationary period in the 1970s, where the stock market basically stuck for 10 years. This is worse, Yeah, this is worse. And we are one of the richest country in the world, one of the best run country in the world. Everything is good except this one. How can our stock market be so bad given that we are a strong financial center? How can it be so bad? Okay? Now, just to give you a feel of where the other markets stand, okay? Those people on YouTube, please all of you give a like. Okay, I really requested it. Okay. This is the FTSE index. This is the UK index. Okay, the UK index. Okay, although it's bad, but it actually still managed to recover from those crashes. Okay, it's still bad. This is probably one of the worst as well, but it's still better than STI. Okay, let's look at this. This is Japan. Japan, there was a real estate crash, and as a result, the stock market went into this long drought. But they managed to come back. They managed to come up. And look at it today. Wow, this from 2008 all the way up is this wonderful, powerful, recovery. Okay, and that's some people say, oh, Singapore mature market already, mature market cannot grow. Look at Japan. Okay, look at Japan. And what's wrong with the Singapore stock market? Those people running SGX, really got to do some soul searching. Okay. Now, fortunately, they were not so bad because the Hong Kong stock market is as bad as Singapore. Okay, arguably it's as bad. You see, it's very flattish. But hey, you compare Hong Kong with Singapore. You know what Hong Kong went through? Hong Kong went through handover to China. Now cannot pressed down by China. Got almost like a rebellion. Like a revolution. We got Hong Kong protests. We got Hong Kong this, Hong Kong that, Hong Kong that. Singapore, what do we have? We have prosperity after prosperity after prosperity, stability after stability after stability. Good things are happening non-stop. And yet, you know what? Those on YouTube, please, all of you give a like. can someone explain, YouTube, why don't you all give a like? Because the more you give a like, more people will realize that the Singapore stock market, is one of the best reasons why their wealth is stuck. Okay, the wealth is stuck. It's very serious. All of us need to know. Yeah. Okay. So we cannot compare ourselves to Hong Kong, right? There is absolutely zero reason why we should be bad. No, I can understand why some other countries are bad. I cannot understand why Singapore should be bad, but we are bad. Okay? So let's talk about what's happening in the Singapore stock market, okay? Thank you, Iris. Okay. The Singapore stock market is made up of about 30 component stocks. The STI index. 30 component stocks, which kind of a basket of stocks that represent the Singapore. Thanks, Soblai. I got people from Facebook went all the way to YouTube to give a like, then come back to Facebook. Please on YouTube. Okay, I feel it's a social calling that we need to educate the fellow Singaporeans, all of them, to know what went wrong. Mr. Lu went through $500,000 of mistake. I held the STI index for $500,000 for 15 years. 15 years. To wake up, okay? To wake up to realize that that was such a big mistake, okay? Such a big mistake to hanging on. And I was lucky. I was just in a lift with someone, and he was telling me, "Oh, STI index very bad. You got no tech stock inside, all safe stock." Then I was so searching. Oh, it will never be high. Okay. So anyway, let's take a look at the major component of the STI index. Okay. The highest component is DBS. Originally it was Singtel. Then I think Singtel also, later I'll talk about Singtel. So DBS has a market cap of $80 billion, followed by Jardine Matheson, OCBC, UOB, Singtel, Wilmar, CapitaLand, Thai Beverage. Okay. So you can see, right? I think these stocks easily take up 30 to 40% of the index, maybe even 50. Okay. In all fairness, the banks are doing reasonably well. Okay, reasonably well. Okay, so this is DBS. DBS is probably the one that really do quite well. Okay, the graph is going up. Okay, this is in Euro because I'm in Europe right now. Google also convert it. Okay, so it's doing quite reasonably well, and we're quite impressed with DBS. DBS is one company that gives reasonably good dividends and has some capital appreciation, but that's just one company. Okay, one company. Look at UOB. Now we look at UOB, not so bad also, not as great, but not so bad. Okay, it's at least a trajectory that's going up. So the banks are actually the one that is doing reasonably well. OCBC, which is my favorite, OCBC, also doing reasonably well. Okay, so not bad. I bought OCBC at $5. Okay, many years ago. Never sell it. Unfortunately, those days are a bit poorer. I only got 3 stocks, and I held it until now. I don't know what's the latest OCBC price. Can someone please tell me what's the latest OCBC price? I bought at $5. This is the best strategy. I buy and forget. Okay? Now, once you move outside the banks, that's where the problem starts. Okay? You look at Singtel. Singtel share price hit a high of $4 plus. I still remember because I used to work in Singtel. Oh, OCBC is $11.50. That's great. I double. I have for many years. If I had put that same amount S&P 500, it would have gone up a lot more. But anyway, it doesn't matter. At least I make money, right? Singtel went up to about 420 or something like that, and it has now 260. 260 today. Singtel, in all fairness, it's not just Singtel. I used to work in Singtel. I'm still a part-time consultant in Singtel. Singtel, like all telecom companies, like all telcos, is facing a difficult time. They get disintermediate by Facebook, by Google, by WhatsApp, by everybody, right? By cloud, by everything. So they are facing a technology disruption. I don't think, unless there's a new technology come up that requires a telco, I don't think Singtel will ever see $4 again. Not in my lifetime. Okay, so Singtel is like all telco facing hard time. Okay, Wilmar is a component stock. Wilmar down. Okay, Wilmar is oil pump down, really down. Okay, Thai beverage. Okay, also a component stock which is very high, down. Okay. So what's the issue with Singapore stocks? Okay, one of the issues with Singapore stocks, okay, is that Singapore stocks, who are the biggest customers of Singapore? Who are the biggest investors of Singapore companies? I haven't gone through this data point, but I have a very strong gut feeling that bulk of the investors of Singapore companies in the SGX must be Singaporeans, right? Must be Singaporeans. Singaporeans or Singapore companies invest in Singapore, we invest in Singapore. But the average Singaporean invests a lot into Singapore. Okay? Yeah, it's Singaporeans that invested. Even the government don't invest that much in Singapore. Let me ask this question. Who among you, okay, say me, there's no shame in this, okay? Majority of your shares are in Singapore stocks. Say me. Majority. And if you have majority of shares outside Singapore, say not me. Okay? Who, me? Yeah. Who have majority of your shares in Singapore? 1, 2, Joel, JL, okay? Majority, okay, Lance is out, okay? Keng Su is out, not me, Henry is not me, okay? Not me, okay? So, in the past, when I ask this question, 90% of people will say, yes, me. Now, looks like 50-50, okay? Which is good. Which basically means that the average Singapore investors have now matured, have actually moved out of Singapore. Remember, I gave the talk on Temasek. They have only about 1/3 of their portfolio or so in Singapore stocks, and then they have 1/3 elsewhere, roughly this benchmark. Those people on YouTube, please give a like, okay? Yeah, please give a like, okay? So it's very important that you ask yourself, why on earth are Singaporeans investing in Singapore stocks for? Okay, majority of them want one single thing. What is that? Why do Singaporeans? What do Singaporeans want out of the Singapore stocks? Dividends. You're right. Everybody wants dividends. They want dividends. Yeah. So naturally, because the average Singaporeans want dividends, they only attract companies. Those companies in Singapore, they are listed, they are bought, and their shareholders, okay, they are bought, will move the company such a way that this company become cash generating, take very little risk, and generate cash and give out dividends. If you want dividends as a strategy, then you will not get growth. There is no company in the freaking world that can easily balance, okay, growth and strategy. You only have one, okay? It's very difficult to balance both. So I take back my word, maybe some companies can, but in the long run, I haven't seen one can do it very well. So therefore, you have got companies that let me tell you. So I'll talk about that later. So one can argue that the Singapore stock market is good for dividends. I don't deny that, because we guided that stock market to give us dividends, So as a result, all the stocks inside try to give us dividends. As a result, the stock market has no growth. right? Because there's no growth, so there's no upside potential. Let me ask you a question. They have no upside potential. Do they have downside risk? Listen to this thing very carefully. Once a company pursues a dividend strategy, there is zero upside potential and there is phenomenal downside risk. Is basically buying a company where you know you will not get upside, but you will have downside risk. I give you the example of the banks. Okay, the banks are doing quite well. But you know why the banks are doing very well? The banks are doing very well because they're protected by MAS, who put a whole fortress around them to let them grow. Okay? Government people told me that. The minute you break up those regulatory protection that protects our local banks, you know what will happen to them? They will become mincemeat. Okay, they'll become mincemeat. So, I give you one simple example that I see in my own eyes. The amount of fintech companies that are coming out now are in droves. Okay, a lot of them were crypto. Fortunately, crypto crash and burn. But there's a lot of fintech companies right now that are attacking the most lucrative part of the banks, chipping and chipping and chipping and chipping and chipping away. Okay? I don't see good in the future of banks. Okay? I don't think they'll be eaten by foreign banks because of foreign banks themselves who are also attacked by the fintech companies. But the fintech companies are coming up and eat them alive. It won't happen in the next 3 to 5 years. 5, 8, 10 years, 15 years, you'll be gone. But because you buy this kind of banks for dividends, you expect to hold on to them for a long time. You are not. But if you want to hold them for short term, it's because you want upside potential. But because you buy banks or buy Singapore stocks is for dividends, you would like to hold them for a long time. Okay? Let me spell out categorically clear how risky is a dividend strategy. And I said it before, I'm going to say again, okay? A good dividend strategy, okay? A company that pursues a good dividend strategy basically means that it generates a lot of cash and give out as much cash as possible to the shareholders. What does it keep for itself? Nothing. No, not nothing. Very few. So they don't deploy a lot of cash for research and development. They don't deploy a lot of cash for R&D, for innovation, for acquisition, or so on. Guess what? Okay, when a COVID hits, when a high interest rate hits, whatever crisis hits, they get into trouble. This is what I mean by there is limited upside potential and phenomenal downside risk. Okay, so for example, ST Engineering, Boon Guan says, limited growth has all payout mainly for dividends. Exactly. All the REITs are in the same nature as well, right? Give out all the dividends as much, cash as much as possible. Okay. So as a result, I don't like dividends strategy because I think the downside risk is very high. Okay. So as a result, I try to step away from the Singapore stock market as much as possible. Some of you are about 50-50, I don't know. Let me tell you, 95% of my stocks are away from the Singapore stock market. Maybe more now, I didn't even calculate. Okay? 95% of the stocks are out of the Singapore stock market. Right? It's really hopeless. Okay? It's really hopeless. Okay? So I don't like the dividend strategy. Maybe some people like the dividend strategy. I can understand, but I find the Singapore stock market totally hopeless. Okay, and the risks are too high for me. Okay, please give a like, please. The other thing about a dividend strategy is that it requires you to do stock picking. I mean, you gotta study, you gotta do research, you gotta make a judgment. This is a good dividend stock. That is a good dividend. So you pick individual stocks. I explained before what's the risk of deploying a stock picking. When you pick stock, you run the risk of what I call lethality risk. The worst part is you buy a stock today, all look rosy with all your foresight. You see, wow, the future look very good. Look at SPH, that's the best example. Dividend stocks, very good. When it hit a high of 440 or something like that, then it went down and down and down. Now today got delisted, left with $1 plus only. SPH, okay. So May you lost 20%, is it? Paper loss. I don't know which stock is that, or a few. So when you buy Singapore stocks, you kena what I call lethality risk. Who will bet that the giant Singtel so mega big? When I was in Singtel, everybody then yaya in Singtel, including myself, we think that we are the fortress, we are like the biggest company in Singapore stock market. Everyone come to talk to us, we talk to them like, it's small fry. Look at the mighty Singtel right now. Stock price from $4 now to $2.60. Okay? So you can see, right? You can, there's some people say, don't worry, I'll make back in the dividends. The amount of capital loss will take you 10-20 years now to get back the dividends. Maybe even not. Because at the rate they're going, the dividends are going to get cut for some of the companies. So therefore, Singpost is 60 cents now. You kidding? What is Singpost share price right now? I haven't monitored. I haven't monitored the Singapore stock market for a long time, okay? Someone please tell me the Singpost, it used to be 150 or something like that. You kidding? 64 cents. What was the highest you ever hit? 150 or something like that. Wow, I didn't even know that. I thought Singpost is we see one because and then Alibaba went to buy them above $2. Amount of dividends they can give out will take you 50 years to get it back. Okay, Keppel was terrible as ever. So you see, the fault is whose, right? I have 20% Singapore stocks now from all my investment. Yes, they're all 20% losses. 20 by 20. Okay. I cannot tell you what you should do, but I'm telling you I avoid the Singapore stocks almost completely. The only some shares I bought long time ago like OCBC is so small that I don't know and bother, leave them there. I got some Singtel shares because I'm still related to Singtel in my work. Singtel peaked at 214, today 64 cents. Okay, my friend held Sembcorp Marine and even lost his underwear. So as you can see, there are almost no good news out of Singapore stock markets, and phenomenally a lot of bad news. Okay, so it's something that I learned it in a hard way. So from experience, my experience in Singapore stocks, I came to realize, wow, it's really something I need to get out. So what I do is a very simple strategy. I deploy capital into globally diversified index like the S&P 500. Okay, globally diversified index like S&P 500. I got dimensional fund in NASDAQ and so on. And I avoid Singapore totally. Singapore index have. Some people argue that Singapore index is very safe. Okay, don't fluctuate a lot. Not really. Singapore stock market, from observation, when people crash, they crash. But when people go up, they don't go up much. It's very bad. It's really very bad. Yeah. So I won't buy China stocks because there's a lot of regulatory risk. Okay, there's a lot of fraud risk and things like that. All right, cool. So basically, I wanted to share with you guys. I want to share with you guys that that we talk so much about US. You know, I want to give you another perspective about Singapore. That my take is that the Singapore stock market, in my opinion, will never see the light of day again. Okay, I don't think you'll ever go back in the next 10 years to 3,800 points, which is 2007. You know, yeah, 15 years have passed already. Okay, cool. Okay, this is a short talk. I thought this is a very important topic because a lot of people ask about Singapore stocks. I thought it's important for me to share with you guys. Okay, cool. Maybe about 5 minutes to answer some questions and then we'll call it a night because it's very late. Okay, sorry I start so late. Anybody any question? 375 of you, less than half of you are given a like. Please don't be so stingy, guys. Okay, this is a very little you could. This is the very least you could do for me. Okay. Let me take a look at the US market. The US market is pretty flattish. Yes. Okay. Pretty flattish today. It's okay. Yeah, you can't expect it to rise every time. Okay. Anyone have any questions or any comments? If not, okay. I'm trying to see any comment. Yes. I think the issue is yeah, many people didn't log in yet. Okay. All right. Okay. So have a good night. How about buying foreign currency right now? Currency is difficult to predict the direction of the currency, so it's dangerous. Okay, I will avoid it. What do you think of EV car stocks? I think EV cars are cars of future. I don't know which one to bet at. I think it's too narrow a market to bet. Those. If no more bullet, is it good to sell Singapore stock to buy ETF? I cannot tell what you should do, but if I've already explained, I actually got rid of all my Singapore stocks and just go US. Okay. Thank you. Okay. So what do you see this? My insights of the Singapore stock market is spot on. Thank you. Thank you for a like. Okay. Can buy euro moving forward. Euro recover against SGD. The Sing dollar is something you don't want to bet against. The Sing dollar is very powerful. Okay. They have. I told you how much our national reserve are, right? I think in a league of 1/trillion, right? So the Sing dollar is backed up by this. You sure? And the euro, I don't know what the hell is it back. Is it the euro? I don't know what is it. Is it backed up by? Okay. Yes. Okay. With this, I don't want to hold back the time to sleep. Okay. Really appreciate your time. Thanks everybody. Okay. All right. Good. Okay. So I give my view on the Singapore stock market and explain why I'm in the US stock market. I hope that this will benefit you guys, not to make the same mistake that I did for 15 years. 15 years of waiting, very painful. Okay. All right. Good night, guys. Okay. Really appreciate this. Good night, guys. Okay. Good night, Angela. Good night to you. Charlie. Good night to you too. Okay. Lance. Good night. Okay. Good night, everybody. Steve, Louis, Jennifer, Sai. Good night. Henry. There is already scammers in this channel impersonating Lou. Really? Okay. Good night. Okay. Good night. Did I make a loss on STI? No, I didn't. But it went up like that by a little bit. But if I put in S&P fund, it will have gone up so much. Yes. Okay. Yes. All give a like before I go. Yes. Thank you. Okay. Is most of S&P 500 endowed? No, that's not true. Most of S&P 500 is not an endowed. Okay. Is option trading good for monthly income? No, very very high. I wouldn't do that. This one I can advise you not to do it. Okay. All right. Good night to you, Siu Ching too. Thanks for helping out with the admin today. Right. Okay. All right. Thank you. Okay. I'm going off it now. Good night, everybody. Okay. Andrea. Good night to you. Okay. Good night, everybody. I appreciate those on YouTube. Okay. Thank you. Bye bye.